What is up, guys? Welcome back to the channel. Welcome back for another live stream, and a big live stream it is today. We got the US Federal Reserve interest rate decisions coming up today, and of course afterwards the big press conference, the moment that everyone's waiting for, when Jerome Powell takes the stage and lets us know what the outlook is for the coming month. So guys, nice to have you here. Welcome back to the channel. I'm Pat. This is Crypto Unhyped, where we focus on the data, not the drama. And we got a lot of data today. I'm not just going to look at the interest rates decision today. We're also going to look at exactly what we can expect for the coming months according to Polymarket, and of course later on according to the speech by Jerome Powell. And as we know, with these FOMC events and these interest rate decisions, oftentimes, or most of the time, the tone by the speaker has a much bigger impact on the price than the actual outcome. As we can see, let's go over to Polymarket right now. Actually, there you can see that the chance right now that we see 25 basis point cut today is by 97%. So this is obviously priced in already. The numbers haven't changed all that much. It's been ranging between 90 and 97% over the last week or so. So therefore, this is priced in. We cannot expect a massive price bounce or move here if we get those 25 basis points cut. But of course, if Jerome Powell takes a stage and lets us know what the plans are for January, if we're likely to continue with rate cuts, and of course, there's a lot of data that has been delayed. I informed you about it already, guys, here in the weekly data sheet that, of course, you can get right now. You can see the link in the chat. It's down in the description as well. And I update you on this every Sunday. Once you sign up to it, you get it emailed directly to your inbox every Sunday when I release it. And here you can always see the macro data to watch, the key events that I'm watching in each week. There you can see, of course, the big one today, the FOMC meeting, and then we had the press conference after, the treasury auctions that have taken place over the last few days as well here, the 10-year, and then on Thursday, tomorrow, we get the 30-year bond auction results. And then, of course, here, all the data that you need, on-chain data, Bitcoin December performance, that's also updated every month. So you can see exactly what the historic performance was for Bitcoin during that month. And of course, my key price levels here on the monthly, weekly, and daily chart for Bitcoin. So to stay up to date with everything that I'm looking at, always just sign up here, hit the link, you drop your email, and then you get it to your inbox every month. Guys, by the way, if you want to see any specific charts or anything, want me to cover anything, drop it in the chat. More than happy to do so. And we got a few more minutes here before the actual press release of the interest rate decision, and then within about 40 minutes time we get the press conference. So within that time, I'm going to cover some ground here, go through the charts. Of course, I took a week off. If you can see it here in the background, actually right now we moved out of the headquarters into the new headquarters. Therefore, it took a little time here to set everything up, and now we're back streaming every day and giving you the information that you need. So guys, why don't we start out here before we get into the into all the data and in all the news and everything that is coming out today. Let's go into the charts actually and see exactly what's going on over there. And here you can see it already. This is now the what is it, the 4-hourly chart, and this is of course the key chart that we've been looking at here, the key level that we've been looking at here since November. You can see a massive price level that has been price support. We got the underside test of it here multiple times now, and now actually for the first time since late October, if I'm not mistaken, we had an underside test of the 200 here on the 4-hourly chart, the 200 EMA. And that is the exact point where we got rejected right now. We forming this rising wedge pattern here now, of course, consisting out of higher highs and higher lows. Bullish in itself if we look at the price action, but the probability for a pattern like this is usually to break out to the downside. Right now, I don't really look at these kind of statistics when it comes to patterns and all that. And just because this market is very, very strange compared to what it used to be like. Market makers are completely different than what we are used to from when this market was basically in the hands of retail on their own back in the days, a few years ago still. And now this bull market really represents that we're looking at a completely different market dynamic we're looking at institutional investors, we're looking at governments fighting over holding the biggest Bitcoin stash. And of course, they're moving billions and not hundreds of thousands and millions, and therefore much easier for them to manipulate the markets. And as we can see here, this has been the key resistance point. This has been the level that we've been looking at here since we came down here a couple of weeks ago, end of November here, and printed this low $80,000, our current low here. And then here started forming this ascending wedge here right now, this rising wedge pattern, retesting the underside here multiple times off the downtrend. So of course, we've been speaking about it here a lot on the channel, that's the first chart that we really want to see flip bullish for us to have any chance to see the daily chart to flip bullish again, and that would flip bullish at $106,000. We'll get into it in a second, but there we have a very similar task here, the same thing that we're trying right now. First task here was, of course, we've been in this downtrend here. We can see very clearly locally in this one here. And then the first thing that we want to do, of course, is to reclaim the prior support here of the prior range, right? We see all these little ranges here on the way down. So we reclaimed that $89,000 range here multiple times now, confirmed it as support. But to really flip bullish here, we, of course, want to take out the prior high in this downtrend, the last significant lower high here, to really then by definition flip bullish. And by definition to flip bullish in a chart, we also want to be trading above the 200 moving average. And you can see that lines up perfectly here right now, that range where we've seen the last significant lower high here in this downtrend, lining up perfectly here now with the 200 EMA and then also the resistance here of the current rising wedge pattern here. So this is what we want to see, a break above the prior high on a closing basis right around $94,000, and then we have a chance to see that continuation upwards towards $98,000, where of course then the same thing comes into play here that we just saw on the 4-hourly chart. This is where we get the underside test of the prior range here, and then to flip bullish we can see it here right at $106,000. This is when we would then get above the last significant lower high here in this downtrend, and then by definition flip bullish by breaking that and printing a higher high. And then of course we want to confirm that with a higher low and so on, but that's the first step here. And of course reclaiming here as support the prior range lows here, lining up perfectly with the 78.6 on the Fibonacci retracement, where we're retracing here from the pivot point down to our current low. Lines up perfectly there here right at $101,000. Getting above there would be very significant, and then you can see just below our pivot point here, right at $104,000 right now, we can see the 200-day EMA here, and then above the pivot point, so that range here between 104 and 106,000. Very, very important. And if we want to see a continuation of the bull market, then of course we need to get above there, because that then also would set us back above the 50-week SMA, which historically of course has been key indicator to confirm whether we're in a bull market or in a bear market. And there you can see it here lining up perfectly with the prior range lows here coming from June 25, which are of course here perfectly aligned also with the highs from December 24 and January this year. And there a key level, the 50 on the Fibonacci retracement, where we're retracing the current uptrend here from the April lows to the current high here. And then you can see that there's the 50 with the 50-week SMA and that significant horizontal level. So reclaiming that here would be an historic move for Bitcoin. We've done it before. We looked at it multiple times here on the channel in the past. We've seen that back in 2021. We had a similar trap here where Bitcoin actually managed to get back above the 50-week SMA, but immediately here followed up with a spinning top, which then was followed up with a bearish candle, giving us a reversal pattern here for this local downtrend. And then we immediately came back down here and ended up going down to our bear market lows. And yeah, guys, so the key thing that we want to see here is not just to get above the 50-week SMA, and especially in very volatile market conditions, what we usually want to see when we enter trades or take significant decisions in the markets is that we want to see confirmation. We want to see a bullish retest, either coming back above here, the 50-week SMA, then testing it once again from the upside and confirming that retest with another bullish candle to tell us that prior resistance has now been flipped into support, or ideally the most bullish scenario, of course, get above it and follow up with another bullish candle here to really confirm that the momentum has shifted back to the bulls and that we're continuing upwards here to test that key resistance. Of course, that is the massive resistance here that has currently marked our top in this bull market. And we look at this massive yellow line here coming from the 2017 top, connecting here with the 65K top back in 2021. And then, of course, 3 touch points here on the 8-year resistance now in this cycle. So that remains the absolute key resistance here that we want to see broken to see, not broken, but we want to get back up there and see if we can flip it. A lot of people have been talking about crazy price targets here for this cycle way above $200,000 and $300,000. And yeah, of course, if we look at just the bull market resistance right here, if we connect the tops here from these ranges here, there we can see that we have a very strong trend line here as well. Not confirmed yet here, only with 2 touch points, but to continue here printing these kind of highs in this bull market, of course, we need to break the 8-year resistance. And although this is a multi-month resistance here coming from March all the way to here, our current tops here, this is something completely insignificant compared to a resistance that has been established over 8 years. The larger the time frame, the more weight it carries, and therefore very slim chances to get up there to such high price targets if we don't break the 8-year resistance. And if we do break the 8-year resistance, that is of course going to look massive across the board, and then we're going to see momentum and liquidity pick up massively, as well as open interest, and then we can see a massive jump in the price very fastly, but still unlikely. And therefore still the potential that if we get back above the 50-week SMA, that we find another rejection at the 8-year resistance, and that Bitcoin only gets very close to the current top if we see another attempt here at printing a new all-time high. So if we do see a new all-time high, I'm expecting it to be somewhere in the $130,000 to $135,000 range. And then, of course, now that we are expecting interest rate decisions here and potentially positive news as far as the interest rate decisions go, we're expecting 25 basis point cut right now in a few minutes. And then, of course, we want to see the same thing once again in January. If that is the case, then that, of course, opens the doors for the retail. And that's something that I've been speaking about here on the channel for a long time, guys, that it's very unlikely that we see all these altcoins go crazy, that this market here has been purely driven by institutional investors and governments, right? We see that all the other altcoins, if you just go into the total market cap charts here, let's go to total 3 specifically here. We can see that Bitcoin, of course, printed new all-time highs. If we look at the total market cap chart, that, of course, consists more or less around 60% of Bitcoin. And there we've seen here new all-time highs, multiple new all-time highs in this cycle. Total 2, we've seen we briefly dipped over the prior all-time high from 2021 here. And that's, of course, because this chart is heavily weighted on Ethereum. So it resembles Ethereum. It excludes Bitcoin. Therefore, very similar to what we've seen for Ethereum this cycle. Underperforming massively, but then in the end coming through and pushing towards the previous all-time highs. And then if we look at total 3, where we exclude Ethereum and Bitcoin, there we can see that we're struggling right at the exact tops from 2021. And if we take the 8-year resistance here, for example, in this case, then we can see here that there's still a huge way to the upside. And we said it before, guys, if we do see a break of the top here, then we can see that the market cap here could double for altcoins. We see currently we're trading below $1 trillion. And then if we would get up here to the 8-year resistance, then of course that would take the crypto market cap, excluding Ethereum and Bitcoin, to about $2 trillion. And that would be massive for tiny market cap tokens that could absolutely go crazy, like some other tokens that are doing it right now. Pippin, for example, Pippin is ripping. Pippin is going absolutely crazy. Something that I got involved in a few weeks or months ago. And yeah, it's interesting to see how these tiny altcoins are performing right now, some of them. And that brings me here to this chart. Just look at this. Is a very, very strong chart that gives us a clear indication that we can at least expect a mini alt season. So this is even better to look at if we compare it here to Bitcoin. Sorry guys, huge mess going on here on my screen right now. But yeah, let's look at the top side here, right? This is the crypto total market cap excluding top 10 dominance. So the top 10 tokens are out. And there we can see these are all the smaller altcoins really. And therefore we have to look at this key level here. So if we look at this level right here in November 2017, you can see that that's exactly when Bitcoin, of course, famously topped out at $20,000. And then the altcoins here, the smaller altcoins, went on a massive rally here, taking it from about doubling basically in market cap percentage. We can see here all the way from 5% to here even more to over 12%, right? And then the same thing here once again in August 2019, where we had like a mini alt season, right? Bitcoin came up towards about $13,000, I think it was. And then altcoins went completely crazy. Here you see Bitcoin topping out, altcoin market cap here, bottoming out once again, and then going on a huge rally here. And then same thing again, we came back down to that level here in the 5% range. And there you can see it. That's the exact time here when Bitcoin printed that 65K top that we just saw here as our second touch point on the 8-year resistance. We of course know that we had a double top formation back in 2021, and there you can see when Bitcoin then topped out here. Afterwards, we can see 65K top out. And then this, of course, here, massive rally taking us all the way up to almost 20% in market cap percentage for altcoins, excluding the top 10. So that's, of course, huge here. And that was here lining up perfectly then. That's when Bitcoin topped out the second time around here at 69K top. And then here the market went back down. Now, the first time since 2021, we reached that level here in the 5% range. And as you can see, historically, there's a 100% hit rate that's the start of at least a mini alt season. So really good stuff here right now. Really big potential here for at least a massive rally for altcoins. And that of course also lines up very nicely with what we can see in the Bitcoin charts right now, that Bitcoin has only very little room to print a new all-time high, which means that once the retail jumps in, they usually like to go for smaller things. And smaller things like the like altcoins, tiny altcoins. They go into the Phantom wallet and all that and try to spot these tiny market cap tokens, just like we did in the Gem Hunter series. And those, of course, have much bigger upside potential. A lot of these retail investors, of us retail investors, are of course massive gamblers, and therefore they go for stuff that looks promising and looks to have a massive upside. If you're not experienced and if you look at Bitcoin, you think like, okay, Bitcoin could go from 100,000 to 130,000, but that's just not very promising to someone who's putting, let's say, $1,000 into the market and hopes to go 100x with it. So they look for these tiny gems to get these massive gains. And that's usually out season, right? That's when the retail really jumps in. You don't see that from institutional investors and governments and so on. That's more something that that we can expect here from retail investors. Guys, I've been talking and I just see that we are already at the time when we should have the numbers. So let's go over there right now and see exactly what we got. Let's see if the Federal Reserve already released it on the website. I don't see anything yet. Here we can see it's official Fed interest rate decision right here on the economic calendar by investing.com. Previous 4%. Consensus was, of course, 3.75%, and the actual has been 3.75% as well. So now it's confirmed, guys. We saw 25 basis point rate cuts, and actually let's go straight into the Bitcoin chart right now and see what's going on over there. I'll come back here in a second and I'll show you some stuff about January, what the current odds are and so on, and then we go back to look at what Mr. Powell has to say in a bit. Right, guys, let's go back into the charts here. If you're watching, drop me something in the chat in case you want to see anything else. I can only see the YouTube chat right now. So I don't know what to, if you're typing something on X or on other platforms, I can't see it. I'm only here, have the YouTube chat open. So whatever you want to see, come over, join on YouTube, and then we can chat here. So guys, here you can see let's go look at the Bitcoin chart. Bitcoin chart here had already priced in. So that's what I was saying, guys. We cannot expect a huge move to the upside here from Bitcoin based on those news, because we had it priced in at 97% probability that we will see the rate cuts right now. And there we have it. We can see here this massive wick to the upside, the massive shadow, giving us a representation, a classic representation of buy the rumors, sell the news. But as we know, with these FOMC rate decisions, the same as the ECB rate decisions, the tone of the speaker usually moves the needle for the price, and that's what we want to see here. Just see here. Oh, Mihao joined us. He wants to see the Russell 2000. Let's take a look at that. The correlation of the Russell 2000 with the Bitcoin chart, I suppose. Correct. I think it always shows the Russell 2000 usually tops out when the Bitcoin chart bottoms out. So let's go and look at that for us right now. Let me just add it here. Okay, here we have it. Sorry guys, I got a huge mess right now on the chart right now. I'll come back to that in a second. I have to pull it up properly now. I just want to keep my eyes here on the Bitcoin price right now for a second. Go into the smaller time frames. I want to see here if we can revisit the prior highs here and see a potential breakout, and want to see exactly what the key support levels are also before Mr. Powell takes the stage. Okay. Yeah, see, you send me the image of the chart. I will pull it up in a second. Let me just go through the key levels here for Bitcoin right now. So as we can see, we've been printing here local bullish structure once again, with the bottom here printing a new high, higher low, and a new higher high here. So of course it's key to hold here. The pivot point in this range here is very clear in that area here, right around $90,000. So if we can get down there, then of course there's potential that we continue here in the local uptrend and test the prior highs again. Losing this would bring us back down here into the area of $87,000, where of course we come to revisit the bullish structure on a larger scale, where we've been printing these higher lows here that we can see on the daily chart very clearly. So that key support here right around 86 to 87,000, if that breaks, that means that it's very likely that the relief rally that is who is Russell? I think you can have that conversation with Mihao in the chat. Russell 2000. But yeah, guys, this is the structure that we have right now, and this is, you can see here very clearly the pivot point here, the underside test is right here, the current top. So we want to see Bitcoin above here on a daily closing basis, above $93,500. Let me just pull up the chart that Mihao is talking about, and then we have a look at that. How do I do this right now? Alright, guys. Give me a second. I need to pull up what's up here. Yeah, guys, so I'll be doing these streams every day now again. As you can see here, we moved location for those of you who tuned in later. And yeah. So yeah, Mia was explaining it. So it's higher risk stocks it's a lot of tech stocks and smaller stocks that usually are way more volatile, and they move when altcoins move. So Bitcoin is coupled directly or indirectly with the S&P and Nasdaq. As we know, historically there's a strong correlation, and altcoins are correlated more to higher risk stocks, and therefore we see a very strong indication right now from altcoins, from the chart that we looked at earlier here and the Russell 2000, that there's potential that these smaller tokens and stocks are now picking up again and starting to rally. Guys, I'm having my struggles here to pull up the picture that that Meow sent me, so give me a second. I'm just trying to figure out how I can do this here. And yeah, guys, so the main event is of course still coming. Fed Chairman Jerome Powell is taking the stage in about 19 minutes. Then we should know a lot more. I'm just trying to get here the comparison of the Russell 2000 here with just give me a sec. By the way, guys, what's with the music? What, is it too loud or is it all right? I can't really hear it. I've set the volume, so I'm not sure about it. That's gonna take me a second. We're gonna get nuked in 90 minutes. Yeah, well, as you know, there's one guy who can compete with Donald Trump on moving the markets with just taking the stage, really, and by his facial expressions, and that's Mr. Powell. When he gets up there, it's either a good time or a bad time. There's no middle room there. I can't pull up the picture for some reason. Trying my best here. Technical difficulties in the headquarters. I'll pull it up. I'll pull it up as soon as I get it. Okay, yeah, I'll keep that on the side for now, but let's I'm sending it over from my phone to my computer, but for some reason it's not working, so we'll give it some time here, see if it works out. If not, yeah, guys, let's look at some more stuff. What else is coming up this week here? We got, of course, the rate decision today. Tomorrow we have initial jobless claims and the 30-year bond auction. So this, of course, also big events here to give us a nice health check on the economy in the US. As we've seen, we covered 2 weeks ago, we covered the bond auctions. They all been picked up at lower rates than expected, which is, of course, usually a good sign that investors are expecting better monetary policies in the US. Therefore, they're buying the debt at lower rates. Now we actually seen that the rates went up here for the 10-year auction. So going to be interesting to see if it happens as well for the 30-year bond auction. That is, of course, then a negative indication for the Fed. And then we have to see here as well that a lot of data has been delayed. So for example, the CPI data that was supposed to come out for November already in the beginning of December was delayed till the 18th. So that, of course, gives us a more indication that the Fed was really flying blind on this decision and really heavily under pressure to make this decision to cut 25 basis points. But now we're recovering all the data. We haven't had data since September. All the CPI, CPE, PPI data and NFP data, the real important the real important inflation data and economic data has been off the table. The Fed has been just playing a guessing game, really. And now we're getting everything for November, and also some stuff is combined with partial October data, and that's of course all due to the government shutdown. And we see here the CPI has been delayed, then the PPI has been cancelled, even potentially not coming out at all for October, November, and everything else is coming out after the rate decision now. So all the data we're getting now for November plays into the decision as well for the Fed on whether we're going to see rate cuts in January again. Still trying to get this chart here. Pretty hopeless. But yeah, let's look at the odds for next month now. So there's 74% basis point cuts here. Here we see 100% now on. Now we see that the odds went up here to 78%. No change for January rates. Of course, this number here can be heavily affected by the decision from by the press conference speech from Fed Chairman Jerome Powell. So that's going to be really interesting in a while. And yeah, guys, actually I'm thinking about covering all these events this week here, still the jobless claims and everything, just because we don't have any actual fresh data from anything. We really just looking at really old stuff either from September, but nothing new. And now events like jobless claims that usually don't really move the needle for any markets at all, stock markets or crypto markets, are now way more important. There's way more weight on smaller events that are not such big catalysts normally. So I will probably come back tomorrow and we look at the bond auctions, and then we also look at the all the other events coming up this week still. Then we have CPI data coming out of Germany on Friday, if I'm not mistaken. And that's also, of course, very interesting. I mean, the situation in Europe, very fragile at the moment as well. So all this data that you can see really plays into the price right now. And normally that's what I'm saying here. Initial jobless claims, that's something we really didn't consider a high important event that had maximum 1 or 2 stars on most calendars here. Now we see these carry a lot more weight because that's the only actual current data that we're getting. Yeah, some serious internet problems here, guys. Running on backup internet right now with the stream, but I'm having a hard time here to send the pictures over from the phone to the computer. So yeah, I'll cover that actually then tomorrow. Very interesting though. I'm looking at the picture right now. I can actually show you like this, if that works. I don't know, let me know if you can see it. And there you see the negative correlation with the Russell 2000, right? And there we can see that every time Bitcoin topped out or bottomed out in bear market rallies here, that then the Russell 2000 indicated really strongly that we're going on an alt season. And yeah, let's go back to that chart actually here before we get the press conference going. I will stream that live. Yeah, guys, bit of a spontaneous stream today, so kind of a mess, but what's important is the data, right? So that's very similar here, right? That's exactly what we're seeing here as well. Bitcoin once again potentially topping out, while the altcoin market here, the altcoins outside of the top 10 are bottoming out, and historically 100% hit rate on that level, that when we reached it here for altcoins, that within a couple of months afterwards we went at least on a mini alt season like we've seen here in 2019, but then also of course the initiation of the actual alt season that we've seen in 2017 and 21. So key level that we reached here right now. Now we can see here that actually on-chain data, the spend output profit ratio. This is a really good indicator, guys, that chart that you can look at if you want to know if traders are selling at a profit or at a loss. And usually when this tips over into loss territory, that's when we're starting to see a rally. This has been traders have been selling at a loss until yesterday. That has now flipped positive here, so that's interesting to see as well if that continues upwards. And that's then also in direct correlation usually with the Bitcoin price, that we're seeing higher price targets now. Very, very interesting. Right, guys, so I really want to cover this press conference, but I'm having huge internet issues here. Yeah. Just trying to fix this here in the background for a second. Right, guys, to everyone watching, really nice to have you here right now. Sorry a bit for the current for the mess that we got going on here during the stream today, trying to figure things out. Bit of a problem with the internet and the backup internet as well, so it was a bit of a spontaneous stream as well, so I couldn't really set everything up perfectly before. Also, the move here to the new location has made things a little bit more difficult, but expect everything to be back on point tomorrow. Now we got about 8 minutes left till the press conference is starting, and we'll definitely get that on here. I just set it up in the background. The speech is at 8:30 our time, 2:30 Eastern time. So should be starting here in a few minutes. Until then, everything else, let me just pull up the press conference actually. Wow. You can see it directly from the Federal Reserve, and hope they are on time. A few more viewers than this stream, as you can see here. But yeah, this is live in about 5-6 minutes. If you want to see any other charts until then, let me know. Apart from the Russell 2000 correlation right now, I can't pull up any new charts here to my trading view right now because it's just not working. The internet doesn't allow me to. Do I look at altcoins much? I do. I look at altcoins a lot, but you know, I'm getting into these altcoins on the stream as well this week now, because I mean the chart that we just covered here is actually really interesting for altcoins. Just because, let me get to it. This is the chart. So you can see this is the direct indicator basically from when usually alt season started. And now we had key support at a level that has brought us the last few alt seasons here since 2017. And therefore that's the one I keep my eyes on, right? There's other charts, of course, that I look at as well. ETH, BTC here in an absolute key spot. And there's, of course, a key level that we've looked at here in the 0.025 to 0.030 area. And there we've seen here that every time we broke above that level here, we ended up coming to retest it. But usually that's also a strong indication once we reach that level down here that we're breaking out, that we reached the bottom here, and that ETH is taking over market cap shares from Bitcoin, and that usually then of course gives us a very strong indication here that the altcoin market is following. So a combination here from ETH, BTC, and then the total market cap charts that you can see here on the side, and of course specifically right now here the others, which is of course crypto total market cap excluding the top 10 dominance, and that's a very strong indicator. Whenever this comes down here and then ends up breaking out, meaning that we get above the prior high here, above the 7 to 8% range currently, then we can expect a move towards at least 12%. And our high is currently here right around 20%. So from this perspective, a very strong indication now that we can see altcoins starting to rally, while Bitcoin, of course, is going to continue moving up as well, but likely at a much lower rate compared to altcoins. Yes. 3 minutes left, guys. Press conference starting soon. That's what you're here for. I'm going to get into all the charts and everything on the regular streams from tomorrow again. We're going to look at all these, and as well here you can see there's a lot of interesting charts to look at here. Altcoins that we usually cover on the channel are Ethereum, XRP, Solana, Sui, and Hyperliquid. And then what I will do from now on is of course also start looking at some crazier ones, where since altcoins are looking to start to break out here, we have a few like Pippin that's absolutely going crazy right now, that I've had my eye on for a few months. And yeah, we're going to get into all these trending tokens as well. And whatever you guys want to see, let me know in the chat as well. More than happy to cover anything here on the channel that you guys want to see. As long as we're still a small group here, makes it very easy for me. And yeah, guys, sorry, I wanted to get into the Russell 3000, Russell 2000 comparison as well. But here I literally cannot pull up anything from my phone to my computer right now. Something with a router, or I don't know what's going on. I'm not a real tech genius, as you might have noticed. But yeah, guys. Just waiting here, leaving this chart open in the background and waiting for the press conference to start. I'll actually head over there right now so we don't miss anything. Need to let me know, guys, how the volume is looking as well. I suppose I need to yeah, man, we already looked at the rate decision. We had that here, right? We can see that now we got the 25 basis points cut here down to 3.75%. This is the current rate, and now of course we're waiting for the big speech that usually moves the needle for the price. not the actual data. This has been priced in. We've been looking at 25 basis points rate cuts for a few weeks now. We can see the press conference is starting. Looks like they're praying, actually. Well, yeah, they're praying for some good news, just like us. Then afterwards, I'll get into Polymarket again and see how the odds changed. Just a quick look here, how it's looking right now for January. January 28th, no change, 78%. Of course, we have a positive outlook now from Mr. Fed Chairman.
Good afternoon.
Then that could be good news.
My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable
how's
prices
the sound, guys? Can you
for
hear
the
it
benefit
properly?
of the American people. Although important federal government data for the past couple of months have yet to be released, available public
definitely
and
praying over
private
here right
sector
now.
data
Got
suggests
everything
that
crossed.
the outlook for employment and inflation has not changed as much since our meeting in October. Conditions in the labor market appear to be gradually cooling, and inflation remains somewhat elevated. In support of our goals, in light of the balance of risks to employment and inflation, today the Federal Open Market Committee decided to lower our policy interest rate by a 1/4 percentage point. As a separate matter, we also decided to initiate purchases of shorter-term Treasury securities solely for the purpose of maintaining an ample supply of reserves over time, thus supporting effective control of our policy rate. I will have more to say about monetary policy and its implementation after briefly reviewing economic developments. Although some key government data have yet to be released, available indicators suggest that economic activity has been expanding at a moderate pace. Consumer spending appears to have remained solid, and business fixed investment has continued to expand. In contrast, activity in the housing sector remains weak. The temporary shutdown of the federal government has likely weighed on economic activity in the current quarter, but these effects should be mostly offset by higher growth next quarter, reflecting the reopening. In our summary of economic projections, the median participant projects that real GDP will rise 1.7% this year and 2.3% next year, somewhat stronger than projected in September. In the labor market, although official employment data for October and November are delayed, available evidence suggests that both layoffs and hiring remain low, and that both households' perceptions of job availability and firms' perceptions of hiring difficulty continue to decline. The official report on the labor market for September, the most recent release, showed that it's somewhat elevated relative to our 2% longer-run goal. Very little data on inflation have been released since our meeting in October. Total PCE prices rose 2.8% over the 12 months ending in September, and excluding the volatile food and energy categories, core PCE prices also rose 2.8%. These readings are higher than earlier in the year as inflation for goods has picked up, reflecting the effects of tariffs. In contrast, disinflation appears to be continuing for services. Near-term measures of inflation expectations have declined from their peaks earlier in the year, as reflected in both market and survey-based measures. Most measures of longer-term expectations remain consistent with our 2% inflation goal. The median projection in the SEP for total PCE inflation is 2.9% this year and 2.4% next year, a bit lower than the median projection in September. Thereafter, the median falls to 2%. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to lower the target range for the federal funds rate by a 1/4 percentage point to 3.5 to 3.75%.
Prior high here on the hourly
term,
chart with
risks
24
to inflation
minutes left on the
tilted to the
candle.
upside, and risks to employment to the downside, a challenging situation. There is no risk-free path for policy as we navigate this tension between our employment and inflation goals.
Sorry about the lags, guys. Yeah,
A
just told me
reasonable
it's
base case is that the effects of tariffs on
bit-
inflation will be
a bit
relatively
shitty, the stream
short-lived,
today.
effectively a one-time shift
Not
in
just
the price
my,
level.
not just my planning.
Our
also the
obligation
internet.
is to make sure that a one-time increase in the price level does not become an ongoing inflation problem. But with downside risks to employment having risen in recent months, the balance of risks has shifted. Our framework calls for us to take a balanced approach in promoting both sides of our dual mandate. Accordingly, we judged it appropriate at this meeting to lower our policy rate by a 1/4 percentage point. With today's decision, we have lowered our policy rate 3/4 of a percentage point over our last 3 meetings. This further normalization of our policy stance should help stabilize the labor market while allowing inflation to resume its downward trend toward 2% once the effects of tariffs have passed through. The adjustments to our policy stance since September bring it within a range of plausible estimates of neutral and leave us well positioned to determine the extent and timing of additional adjustments to our policy rate based on the incoming data, the evolving outlook, and the balance of risks. In our summary of economic projections, FOMC participants wrote down their individual assessments of an appropriate path of the federal funds rate under what each participant judges to be the most likely scenario for the economy. The median participant projects that the appropriate level of the federal funds rate will be 3.4% at the end of 2026 and 3.1% at the end of 2027, unchanged from September. As is always the case, these individual forecasts are subject to uncertainty, and they're not a committee plan or decision. Monetary policy is not on a preset course, and we will make our decisions on a meeting-by-meeting basis. Let me turn now to issues related to the implementation of monetary policy, with the reminder that these issues are separate from and have no implications for the stance of monetary policy. In light of the continued tightening in money market interest rates relative to our administered rates and other indicators of reserve market conditions, the committee judged that reserve balances have declined to ample levels. Accordingly, at today's meeting, the committee decided to initiate purchases of shorter-term Treasury securities, mainly Treasury bills, for the sole purpose of maintaining an ample supply of reserves over time. Such increases in our securities holdings ensure that the federal funds rate remains within its target range and are necessary because the growth of the economy leads to rising demand over time for our liabilities, including currency and reserves. As detailed in a statement released today by the Federal Reserve Bank of New York, reserve management purchases will amount to $40 billion in the first month and may remain elevated for a few months to alleviate expected near-term pressures in money markets. Thereafter, we expect the size of reserve management purchases to decline, though the actual pace will depend on market conditions. In our implementation framework, an ample supply of reserves means that the federal funds rate and other short-term interest rates are primarily controlled by the setting of our administered rates, rather than day-to-day discretionary interventions in money markets. In this regime, standing repurchase agreement, or repo operations, are a critical tool to ensure that the federal funds rate remains within its target range, even on days of elevated pressures in money markets. Consistent with this view, the committee eliminated the aggregate limit on standing repo operations. These operations are intended to support monetary policy implementation and smooth market functioning and should be used when economically sensible. To conclude, the Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing our inflation sustainably down to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. At the Fed, we will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
Howard.
Thank you. Howard Schneider with Reuters. Just first turning to the statement, just to be clear, we're on the same page here. The insertion of the phrase, considering the extent and timing of additional adjustments, does that indicate that the Fed is now on hold until there's some clearer signal from inflation or jobs or the evolution of the economy along the baseline outlook?
So, yes, the adjustments since September bring our policy within a broad range of estimates of neutral. And as we noted in our statement today, we are well positioned to determine the extent and timing of additional adjustments based on the incoming data, the evolving outlook, and the balance of risks. That new language points out that we'll carefully evaluate that incoming data. And also, I would note that having reduced our policy rate by 75 basis points since September and 175 basis points since last September, the Fed funds rate is now within a broad range of estimates of its neutral value, and we are well positioned to wait to see how the economy evolves.
And if I could follow up on the outlook there, it seems like with the additional GDP growth coupled with easing inflation and a fairly steady unemployment rate, this seems like a pretty optimistic outlook for next year. What's given rise to that? Is this an early bet on AI? Is there some sense of improving productivity out there? What's driving that?
So a number of things are driving what's happening in the forecast. And I would say if you look broadly at outside forecasts, you do see a pickup in growth in many of those now too. So it's partly that consumer spending has held up. It's been resilient, and to another degree it is that AI spending on data centers and related to AI has been holding up business investment. So overall, the baseline expectation for next year is, at least at the Fed, and I think with outside forecasters too, is a pickup in growth from today's relatively low level of 1.7%. I mentioned that the SEP median is 1.7 for this year growth and 2.3 for next year. You actually, some of that is due to the shutdown. So you can take 0.2 out of 2026 and put it in 2025. So it would really be 1.9 and 2.1. But overall, yes, for a few reasons, fiscal policy is going to be supportive, and as I mentioned, AI spending will continue. The consumer continues to spend, so it looks like the baseline would be solid growth next year.
Steve.
Thank you, Mr. Chairman, for taking our questions here. You had previously described rate cuts in terms of a risk management framework, and kind of following up on what Howard was asking, is the risk management phase of rate cuts over here, and have you taken out sufficient insurance, I guess, against potential weakness in terms of the data we might get next week when it comes to employment?
So we're going to get a great deal of data between now and the January meeting, and I'm sure we'll talk more about that. And the data that we get are going to factor into our thinking. But yes, we have, if you go back, we held our policy rate at 5.4% for more than a year because inflation was high, very high, and unemployment in the labor market was really solid at that point.
Right, guys, so we're getting a bit of a nothing burger here from an absolute specialist and talking a lot without saying anything here from Mr. Powell. Basically, to summarize it from what I heard so far and understood so far, is that they are pretty confident in their position now with the current rate decision in the US and don't feel too much pressure in having to commit to cutting rates again for the next month. And the next rate decision will be at the end of January 28th. And of course, like Mr. Powell said, there's a lot of data coming out until then, and therefore they still can really position themselves differently and continue to cut rates. But for now, they're in an observatory position right now where they can really allow themselves, from their point of view, to see how the economy is developing, how the data is coming out, because of course this rate decision was basically like a gun on the head, right? They've been doing it completely blind. There's been pressure from left and right to make that decision to cut the rates. And now, of course, like he's saying, keeps going back to his point of that it has been cut in this year by 3/4 basis points alone. And therefore, it indicates very strongly that Mr. Powell is happy with the current position of the rates, and therefore unlikely that we see further rate cuts in January from the current point of view. Of course, a lot of data coming out, November data, December data, and then we're at the end of January, so they will have a much clearer view on what's going on with the economy then to take a decision. The outlook for 2026 is growth, economical growth in the US. Of course, a lot of promises coming from the AI sector that there will be huge growth in the economy from that perspective as well. That, of course, the US big player in that game, and it's only growing, and therefore that can create a lot of jobs, can create a big cushion for the economy. So it remains to be seen. And for me, that one is a big one as well. Like the way I'm looking at the crypto market right now, the way I'm looking at altcoins and stuff, it's I think this is the cycle where a lot of AI tokens are already distancing themselves from other altcoins and showing that there's a real momentum building up, and we're just getting started. So this alt season could be really be led by AI tokens, and expecting the same thing for AI companies in the US, AI stocks to really outperform the rest in the market. And of course, the Fed needs to take a step back now, take in all the data after we've been literally flying blind since September 30th. September 30th is when the government shutdown started. I think it was the longest government shutdown in the history of almost, I think it was a month and a half, no data. And that means, of course, that the agents that are usually sent out to collect data, of course, at home, not doing anything, not collecting data, and therefore we can't even recover this data anymore. Most of it is lost. Most of it we will never find out, like we saw here with the data for that was supposed to come out this week, has been completely canceled. Then the other data has been delayed, and of course it's a very tough decision for the Fed to give us an optimistic outlook without really knowing what's written in the books. So really interesting times, guys. Of course, we also heard that they're injecting the money that's coming out of the printers now again during quantitative easing back into the economy, and buying, of course, assets with all this helicopter money that's worth nothing. They're trying to get into deflationary assets to purchase them. And of course, Bitcoin is a huge liquidity sponge, not just Bitcoin, but the entire crypto market and risk assets. And when the printers are on, that's usually when Bitcoin is going up and the crypto markets are going up. So really interesting times right now, and really interesting in the charts as well. We'll get back into it tomorrow properly. Today, of course, main goal was here to cover the press conference, to make it through to the press conference. I've never had such a long stream on my channel, as you guys might know if you've been watching for a while. And it's been a bit challenging here because I haven't prepared anything. I just pressed play almost and just wanted to really keep an eye on the Bitcoin chart. But we have had a very neutral outlook here from the press conference. The rate cuts have been priced in. There's one more thing that we can do right now before I wrap it up here, and that's to go into Polymarket to see how the odds over there have developed during that speech. Now here we see now the same thing. Odds for no change, no rate cuts in January went up. We were at 76, then 78, now 80% chance that there will be no rate cuts, and therefore also the tone, not hawkish, not dovish, very neutral, very happy about having gotten over it basically with cutting the rates this month due to the pressure that the Fed felt to cut rates. And now it almost feels like they are happy to take a breather, to not feel the pressure to have to cut rates again next month, and therefore probabilities that it won't happen. And then we got to keep our eyes out again in February, how the economy is developing in the beginning, in the first quarter of the year. And then, of course, if the Fed then decides to cut rates, even if we're going down to deeper levels for Bitcoin and we're reaching our bear market lows, the dynamics in this cycle alone have changed so much that, of course, we don't need to hang on and hold on to all these statistics. The 4-year cycle has been very precise once again. 1 year down, 3 years up here. We literally hit our top exactly as a lot of people have been predicting due to that data back in October. And then now, of course, it remains to be seen if other things continue to have 100% hit rate, like the 50-week SMA. Can we reclaim it? Can we get back above it, confirm it as support after dipping below it, or can we not? And if we don't, then of course that continues to be exactly the same as it was historically as well. So really interesting. Yeah, just got a message here from Mihao saying that the Fed says they will buy 40 billion in treasury bills. So yeah, that's what we just spoke about. They're re-injecting all this helicopter money back into the US. That of course shows very, very strong confidence from the Fed to buy up the debt from the US at these rates right now, with an outlook for much better economic policies in the US. So positive things, some also very negative things there, in that there's no real certainty in how they will proceed. And of course, we can expect a bit of a battle between Fed Chairman Jerome Powell and President Trump over the next few months, as Mr. Trump, of course, wants these rates to be cut and continue to be cut. And it's not always that easy, not always that simple. And there's a strong conflict between the two a lot. And now it's going to be interesting if he even remains in the chair for the Federal Reserve, or if someone else will be put in his position. So interesting times. As always, I'll keep my eyes on the charts. I'll let the price tell me exactly what's going on. And for right now, we're holding the range. The key levels that we need to look at are very clearly defined. We want to stay above $89,000 here for Bitcoin on a 4-hourly closing basis to continue confirming that as support. And then to break out of here and to flip bullish, we really need to get back above here. The key pivot point, this key area right here, the gray area. And we want to see the price now trade back above $93,800 more or less. Confirm break above there. Gives us clear indication that we're not just breaking out of here the rising wedge pattern, but also puts us back above the 200 EMA here on the 4-hourly chart. And by definition, that chart then flips bullish. It also flips bullish by reversing this downtrend here, by breaking the last significant lower high here, giving us then a clear bullish structure. And then of course we want that to drift over into the daily chart, where we need to reclaim prior support here in the $98,000 to $101,000 range. And then the key level to get above here, $106,000, almost on the cent here, will also then put us here above the 200 moving average and officially flip us bullish. And then if that drifts over into the weekly chart and we can close back above the 50-week SMA and confirm above there, then we have clear signals that the bull market is continuing. And then that also lines up perfectly here with what we saw here for the total market cap chart, especially for the altcoins, that we will see a massive alt season in the coming months. Of course, none of this is certain. None of this is guaranteed. A lot of things can happen. The only thing we can do is keep our eyes on the price. And I'll be here to do it for you guys, covering the Bitcoin price, covering the crypto market, and all the key economic events here live on the channel in the coming weeks and months. I'll keep you updated exactly on what's going on. And guys, of course, I've been on and off over the last few weeks here, especially since summer. It's been tough to be a follower or a subscriber here on the channel, because it's been a bit unpredictable and I had a lot of stuff going on. But you can see here now with the current situation, that is a permanent situation here. This is my new spot from where I will be streaming consistently, and I'll get into a lot more stuff. So 2026 is going to be the year where we are going to grow this channel to the moon. This year, my goal actually was surpassed. In the beginning of the year when I started the channel, I was targeting 10,000 subscribers by the end of the year. We reached that by summer, I think, and now we're sitting just under 17,000 subscribers. So here, call to action, guys. If you are new to the channel and you enjoy this stream and you want to see more of it, if you enjoy my analysis, then hit that subscribe button to join us here in Team Crypto Unhyped and all the good stuff. Activate that notification bell. And guys, right now, smash up that like button. It really helps me out here with the algorithm. It seems like a stupid little thing to do, but it really is a massive one here for YouTube to know that you guys are watching and that you guys are enjoying the content. Right, guys, long stream, almost an hour, now an hour and 15 minutes. I need to drink a glass of water, wind down, and then I'm back tomorrow. I'll release it tomorrow at what time I will be doing over on X as per usual. And yeah, guys, now I'm out of here. And as always, happy trading. See you soon.